Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. So, we are continuing our conversation on how to prepare for tax season. So, step number 5 is doing a financial review. So, you found your tax preparer, you schedule your tax planning session, you're getting your documents ordered, you're getting your books in order. Now, the time is to do a financial review. And I want to give you a couple things to look at and research when you do a financial review. So, number one, once your books are all in order, look at your revenue, your gross profit, and your total expenses and compare those three to last year, compare it to the previous year. And when you compare it to the previous year, there could be some things that may stand out to you. Also, this will maybe be there maybe be some red flags that may come up. So you want to make sure you're just doing this to make sure that everything is being recorded. So definitely look at the previous year. Make sure everything is looking consistent. You're getting all of your questions answered before you actually submit to the tax preparer. So once again, review the revenue, gross profit, and total expenses. Compare those three to the previous year. Depending on your business, it may be consistent, it may should be an increase, it should be a decrease. So you just want to make sure things look reasonable to you. Number 2, run a expense by vendor report. So if you're using an accounting software, most of them have a report that you can run expenses by vendor. And I actually like to run this report by month. When you run it by month, it will actually show you the continuing payments. And so if you have reoccurring expenses such as rent, you should see that payment every single month. This is a very good report just to make sure things are being recorded. So say for instance, if you see no rent payment for June and maybe, not for August, that's a red flag. So before you submit to your tax preparer, you want to make sure all of your expenses are recorded, and you may need to have someone perform accrual. Someone may need to accrue some of these expenses. So that is a part where you'll get some accounting help. So once again, the report is called expenses by vendor, and you want to see that by month to identify, or I should say ensure, that payments have been being made for your reoccurring and then even for your non-reoccurring expenses. Then number 3, you want to look at your accounts receivable and accounts payable report. So if you are utilizing the invoice function in your accounting software, you can run an accounts receivable report. Accounts receivable report lists all of the outstanding invoices. So this is money that is owed to the business. This is very, very, very critical that you look at that report, make sure everything is updated, and then also make sure that you have actually entered in all of your invoices, because you want to make sure that revenue is recorded. Then regarding the accounts payable, if you enter all your bills into your accounting software, you can run an accounts payable report. Accounts payable report lists all of the bills that are outstanding. And what I mean by that, there's some businesses, even nonprofits, that they do not enter their bills into their accounting software. And what I mean is that could be the rent, the bill for the rent, the bill for maybe the social media consultant, maybe there's some legal bills. Enter all of those bills into your accounting software. So that way, everything is being recorded instead of having them, on your desk and your email. Good accounting practice is that you actually record those types of items on your book. So with accounts receivable and accounts payable, you want those reports to be as clean as possible. There should be no negative numbers. That's a common mistake. There should be no negative numbers on either of those reports. Lastly, you want to identify purchases that will affect your fixed assets. So, for instance, if you purchase equipment, any vehicles, any large equipment, any large purchases that may be considered a large asset. An asset is an item, is a thing that the business owns. So you want to identify those things and talk to your tax preparer and say, okay, I believe these may be fixed assets. a lot of times tax preparers, they're not going to go through your general ledger or your financial statements and identify these fixed assets. So you definitely want to prepare at least a preliminary list. Sit down with your tax preparer and say, okay, this is what I'm thinking, and then you can discuss that with them. So, with all of that said, definitely review your financial statements, your financial records with an account with an accounting. You need accounting help. You need someone to help you interpret, to analyze those financial statements. So don't go it at alone. So sometimes it can be your tax preparer. Sometimes it may be that tax preparer is a CPA, maybe an accountant, but you definitely want to review your financial statements with an accountant before you submit to a tax preparer. This will limit on errors and then also help save you some money. So hopefully you find this information helpful. Make sure you share, you comment, and you like. I'll see you next time. Bye-bye.